Hey stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the Edge Finder, completely for free. Now, how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the Edge Finder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the Edge Finder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now, here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the Edge Finder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream. All right, good morning, everybody. Welcome back to another live stream, and happy Friday to you. I hope everyone here is doing well and staying safe. Hope your week was okay. We've got the weekend right around the corner. It's looking a little dreary out today here where I am. Hopefully it's a little nicer where you are. I hope you guys have some nice weekend plans scheduled. Let's talk a little bit about these markets, what's going on, what is moving. We have gold and silver actually up here a little bit today. Gold is testing the upper limits of our resistance channel that we've talked about here for the last, 2 weeks or so. Resistance overhead is coming into contact here. We'll see if this does respect resistance, if we do start to roll back over, or if the bulls can get a breakout going for gold. I know a lot of my listeners here tune into the show are big gold traders. I love trading gold myself, but I'm also pretty nimble in terms of what I trade. I trade a really wide range of things. And I remember a long time ago when I first got started trading, that was a scary thing. Like to trade many different assets sounded kind of, it sounded like crazy. Whereas now it's like actually my thought process is that if you actually track fundamental analysis and you study kind of what's driving markets, sometimes gold is not the easiest thing to trade. Sometimes the dollar is easier to trade. Sometimes oil is easier to trade. Sometimes indices produce really great setups. And having a more diverse list of things that you trade, if you know what you're doing, and that is a big if you know what you're doing, that is actually a very, very strong thing to have on your tool belt. It's like it's like having a lot of different tools in your tool belt rather than just having a hammer, right? Sometimes a hammer is not the right tool to use for finding trades, right? My analogy is jumping back and forth, but you get my point. Sometimes it's easier to trade commodities. Other times it's currencies. Other times it's indices. And by really tracking, not necessarily staring at gold and only trading gold, instead of doing that, instead of saying that, let's actually just look at what money flow is looking like. What are institutions buying and selling? Like if we take a look at where commitment of traders report data is very clearly bullish or bearish, or if we take a look at the crowd sentiment and we say, oh, we have a rare instance here where crowd sentiment is really one-sided on a particular instrument, let's say for the S&P 500 or for gold, etc. Or let's say we're looking at the macro and we understand that, okay, jobs data came in a certain way, inflation came in a certain way. This sets up a particular instrument for a better, clearer trade. I am a big believer in finding the easy trade in the room and just trading that. And I know that sounds like really dumb, obvious. Like, yeah, of course, we all want to take the easy trade. But what is the easy trade? Well, the easy trade is the one that has kind of everything going forward at once. If I look at the S&P 500, right? I have a neutral reading within EdgeFinder. This is not an easy chart to trade for me right now. If I'm looking at the S&P 500 technical chart, this is not an easy chart for me to trade. I don't have a clear trend. I don't have a breakout that I can look at. I don't have clear structure where I can set up a nice risk reward setup. But what about oil? Why do I like oil right now? Well, I'll show you the macro in just a second, but look at the chart. Higher lows are present on this chart. Breakouts are taking place on this chart. Apply some simple moving averages. Take your pick of a couple moving averages you like. I don't care which ones they are. Moving averages folding over to the bullish side. You see where I'm getting at with this? There's charts that are easier or harder to trade at all given times. If you are somebody who says, I only trade gold, or I only trade S&P, or I only trade NQ, totally cool if you're like a day trader, right? Because day trading, you might get a lot more setups different day to day. But we do a little bit more swing trading focused on this show. I mean, that's what I trade. I primarily am a swing trader. By having a situation in which I'm nimble enough to switch charts, I'm able to capture what's moving here and now more often than not. So here's oil. Dragon says, I only trade what Nancy Pelosi trades. Genius. Genius. I'm short pound dollar on the 1 hour chart. By the way, guys, let me know real quick. If you have a particular chart that you're interested in, I'll consider looking at it. But can you do me a favor? If you want me to look at your chart, let me know what position you have on the chart. So like, this is a good example. We'll look at pound dollar because Aizen says, I am short the pound dollar on the 1 hour time frame. We'll take a look at that trade and I'll give you my thoughts on it. But share with me if you want me to take a look at some charts. Share what you're trading and the time frame you're on and whether you're long or short. And maybe I'll take a look at some charts for you. So I'm looking at oil here, bullish. I do still like this. Why am I bullish on oil? Well, we can break it down using a really, I just love having this, man. This is 10 years ago. This was my dream to have a tool that would do this. Technicals +3. So technicals look solid. We've already got that checked off. That's an easy call. Technicals are straight up bullish on oil, at least on like the 4 hour chart and the 1 hour chart. We've got some really good strength. Sentiment and COT report. Why is this getting a neutral reading? Well, overall, institutions are long oil, but in the latest filing, they sold oil. By the way, little star exclamation point on this one. Today we get new COT data. So if you have EdgeFinder, check this out this afternoon, and let's see if that changes at all. So we'll keep an eye on that. GDP growth, PMIs, services PMIs, manufacturing PMIs, our economic growth reading, without getting too far into it, bullish. Inflation reading, bullish. We had good CPI numbers, the 2-year yields moving lower. The jobs market has shown some recent strength relative to expectations. All of this produces this section right here, this whole area, that's going to be your fundamentals scoring. All this said and done, EdgeFinder is giving us a +6 reading for oil. I like the chart. That is the easy trade in my book right now. And that might change. Easy doesn't mean I win them all, right? Definitely not. I ranted about that yesterday. I ranted about it every single day. I don't win all my trades. I just don't, and I don't have to. I am profitable not because I'm right about everything I say. I'm profitable because I cut losers quickly, I let winners run, and I follow the macro and price trends. That's it. I mean, the big thing is I manage risk really, that's something I'm huge on, is small risk per trade saves you in the end, because there's going to be a time where you have a bad losing streak. Happens to everyone, myself included. Every single trader you've ever seen, the most amazing trader you've ever seen on social media has had terrible drawdowns. Whether they tell you about it or not, that's their choice. That's the deceptionary side of YouTube and Instagram and TikTok and all that, is people don't have to show you when things are going terribly wrong. They can choose to do that or choose not to. But I'm telling you, every single person, every single trader goes through rough drawdowns. How do you survive those? Small risk per trade. It's the only way. There is no other way to survive drawdowns than small risk per trade. But you might say, well, then I'm not going to have I'm not going to double my account quickly. Ta-da, bingo, you have reached the promised land of realistic trading. Nobody doubles their account quickly and easily without taking massive risk. So anyways, let's keep going because let's get through some charts here. Sluggy's got Russell. I'm long on the Nasdaq. Okay, let's take a look at some indices really quick. So Russell, I actually really like Sluggy. I like that one a lot. Chart's choppy right now alongside most indices, but at least out of the gate this year, we've had a clear, decisive move from the Russell. If I'm long an index right now, it's the Russell. I'm not, but if I was, this is the one I'm looking at. Could we get a pullback into the 2600 or 2550 area? These are areas in which I might join you on the trade. We might not go there. I'm not saying I think we go there. We may just rip right through the highs, and you would probably love that. But for me personally, for me to join the trade, I'd probably need a pullback into this area or this area. But I actually do also have some confirmation from Edgefinder, at least for now. COT data could shift things a little bit today. But generally speaking, weekly jobless claims were good, unemployment rate was good, non-farm payroll was good. These things, you might actually say, well, those are not great for the Russell because that's going to send yields higher and rates are not going to come down. True. But despite that data, we still see the 2-year yield cooperating. Let me show you what I mean by cooperating. Let's take a look at the 2-year yield. 2-year yield is actually rolling over. Expectations for rate cuts are still coming. Russell should like that. The 2-year yield is not breaking through highs, which would tell you Fed's going to not cut rates. Fed still seems to be on target to continue to cut interest rates, even if it's slow. A decent economy and rate cuts, or actually a strong economic growth in the economy, which is happening right now. Whether I know that sounds like gaslighting and it's very K-shaped, so hear me clearly. I'm not saying everybody in the economy is feeling great, but this economy is rock star right now from an output perspective, not necessarily from how the consumer is feeling, not necessarily how everybody is not everybody's feeling rich. I get that. People like to get really mad at that when I say that. I'm not trying to offend anybody. I'm trying to just tell you from a nominal output perspective, the US economy is going crazy right now, 4.4%. Compare that to other major economies. US is gangbusters right now. Take a look at this economic strength index. Let's compare GDP growth just across a wide range of major currencies. Switzerland, Japan, Australia, the UK, New Zealand, Euro, Canada. US puts them to sleep in terms of GDP growth. Why? AI, data centers, all that build out is just pumping money through the economy. It is a massive stimulant. The Mag 7 are all pouring gasoline or fire on the gasoline here with growth. Now again, that doesn't necessarily mean that everybody feels great in America. I understand that. I'm not trying to harp on that topic, but sometimes I will mention that people are like, what do you mean the economy's in the garbage? It is just objectively not. If you trust the data. Now, of course, if you're a skeptic, you might say it's not true. And is this Trump? Maybe, but it also has been pretty solid for a couple of years. It's not necessarily the Trump administration is maybe some of that, maybe. My point though, I would say a big chunk of it is the secular trend right now that is AI. It is pouring money into the system and causing GDP growth to be strong. So we do have PCE numbers. Sorry, guys, I missed that. Let me react to that here. I believe PCE numbers are out. Yep, 0.4%. So we did have PCE come in just a little higher than expected. Look, advanced GDP actually coming in lower, just despite what I said there. Although they did revise. Whoa, they revised the previous number up to 4.4%, revised from 3%. Interesting. Let's take a look at market reaction to this. S&P 500 and Nasdaq moving lower here. Look at that. Okay. And that PCE number, hold on, let me FX Street really quick. Nick, how do you believe the data from the US? I get this question all the time. Look, if you think that everything is manipulated and faked, you should not even trade markets, like, period. Because if they can fake all that data, who's to say they can't fake everything that you're looking at in a chart? I understand the skepticism of is the data fudged? I get that. In fact, maybe it is. Maybe it isn't, maybe it is. But even if it is, even if it isn't, there's some level. I equate this. I have a scale, one of those. No, I understand. I'm not coming at you. Trust me. It's a good question. I have one of those scales that you stand on each day to weigh yourself or whatever, but it also gives you a bunch of biometrics about you. Does anybody else have one of these scales? I have one of these scales that is a biometrics scale. It will tell me like my like my muscle mass and all these other different metrics. But I've also looked up on the internet that those things are not very accurate. However, they are generally pretty accurate for the direction of your biometrics. So let me give you an example. I'm trying to personally, I'm just oversharing right now. I'm trying to get in better shape. I'm in pretty good shape. My doctor says I'm pretty healthy, but I want to get better, right? I want to get even better. I want to get stronger. I want to get healthier. And so I've been watching my biometrics over time. I'm trying to lower my body fat percentage and raise my muscle mass. What's interesting about that is that those scales are not necessarily accurate. And trust me, I'm staying on topic here. But generally, from what I can understand and from what my doctor also said, they're more about direction than they are about the indication of the exact statistic that you have. I would argue probably the same thing for government data. Government data, is it like precisely perfectly accurate? No, they've been revising the jobs data like crazy. Is it generally indicative of the trend? Yes, I would say so. So that's my thought is, should we trust every single bit of, jobs data, maybe take it with a grain of salt, but more importantly, look at the direction of where it's headed, right? So maybe you don't trust everything. I understand. I respect it. I think skepticism is a healthy thing in this world. But if I'm looking at the jobs data, I don't need to be a genius to say, which way is this jobs market generally heading? Down. But we did have a nice uptick here recently. And let's see if we get a couple more. Maybe it's safe to say that generally jobs data is looking a little bit better than others or better than before. Does that make sense? If you feel me on that, can you give me a 1 in the chat? I just want to make sure that my little analogy there about my biometric scale made some sense. I'm just saying, I think generally, look at US economic data. Sure, have your skepticism, have your reservation, but look at it as a directional indication, not as a I trust everything. And by the way, it drives me crazy when people say, oh, I don't trust the Trump administration. People said the exact same thing under the Biden administration. Do you think everybody that puts these numbers together was just kicked out and replaced by the new administration's people? No, a lot of those same people are doing the same numbers. It's crazy. It's crazy. I understand the skepticism, but it's like people will flip. They'll go from I trust the numbers because I like this president to I don't trust these numbers because I don't like this president. Just leave that stuff at the door, man. It is one of the biggest things that hold people back in their trading is I don't like this president, so the stock market has to go down. The jobs market must be bad. Leave that behind, man, because I'm telling you, that will hold you back. Whether you like or dislike Trump, whatever, man, trade the data, trade the markets, leave your politics out of it. You will be better off. Politics has an amazing, amazing ability to completely wreck people's trading results. Okay, so I'm sorry, I took a minute here to get to this, but let's take a look at what we had report this morning. So PCE year over year did come in at 2.9%. That was above forecast of 2.8%. We also have core PCE. I'm looking for personal consumption year over year. There it is, 3%. So a hot inflation print here this morning. We do know that this is the Federal Reserve's preferred measurement of inflation. Okay, and I got a lot of ones. Thank you guys for that. It is actually hope restored for me when I talk about how, like, hey, can we just like leave politics out of it? It does actually seem like the silent majority is a real thing, despite us being through this YouTube thing we're talking to each other through. I don't know you personally necessarily, but we're communicating through YouTube here. And you know, it's like everywhere you look, politics is so loud and in your face. And I do really believe, I like to believe that the silent majority of people are like, hey, we have different views or whatever, but we can be cordial and respectful to people. And um, I think online that gets lost, but you know, a lot of people, I think, truly are in that silent majority of people that are like, I have my views, you may have yours. I don't hate you if yours are different than mine, whatever. And when it comes to trading, my gosh, people destroy their trading accounts because they love or hate Trump, or they love or hate Biden, or whatever. Just leave it out of your trading, I'm telling you. Anyways, dollar index is still trying for this level of resistance here, this 98. 98 coming in right here. Let's see if we can break through that. I've been saying that for a couple days. We did take a look at intraday with me on the dollar index. I've been watching this one really close. Intraday, we came up to that 98 level and saw a little bit of rejection, PCE coming in hotter than expected, though. Can that get us a breakaway movement here on the dollar index? That is looking, at least on the 1 hour time frame, it's looking like a little bit of a bull flag postured up firmly at a resistance point on the daily time frame. Let's watch it. Yields jumping on that, and man, that made me look dumb, huh? With that talking about how GDP was all strong, and then we just got advanced GDP numbers that came in light, 2.8 expected, 1.4. So, but anyways, 1.4% GDP growth, 2.8. That is a very low number. That is very low compared to forecasts. Core PCE also higher than expected. So this is dollar bullish. This is dollar bearish, but PCE is going to be a pretty big indication. Advanced GDP price index also came in high, so that is inflationary. Personal income came in line with expectations. Personal spending came in line with expectations. What can I trade today, Nick? What do you trade? What's your strategy? How do you approach markets? Are you a trend follower? Do you trade mean reversion? Are you a macro trader? You should trade, and I know this sounds like a kind of a jerky response, but you should trade what your system tells you to trade. And your system should be something that you've thoroughly tested. And if not, you should stick to a demo trade or a demo account, and you should learn a strategy that actually works over time. Nasdaq is actually pressing lower here this morning. Look at that 15-minute candle, guys. Nas is pushing lower. I would love to see Nas to continue rolling over. I am not short Nas. I'm not short S&P. I'm not bearish indices. But I would love, from just a long-term perspective, to be able to buy some stocks this year. I did a lot of shopping last year. I started buying stocks here. I was early, but I added to some of my longer-term stuff. And that ended up being a really nice buy. But I haven't really bought stocks since. Ever since this area, I've really not gone hardcore shopping in stock world. So yeah. Can we get Edge Finder in India? Yes, you can. We have actually a lot of Indian people that use the Edge Finder. We have people all over the world that use the Edge Finder. What do you think the ideal time frame is for trading with Edge Finder? I get that question a lot, Damien. That is a good question. And I said it in my video yesterday because I get it so frequently. People say, okay, you're getting this bullish reading on Russell, but how do I take that and how do I trade that? Well, I'll show you exactly how. This is not a 1 hour or 4 hour or 1 day, 1 week signal to buy on that time frame. It's not what that is. What this is telling you is it's telling you when we look at technicals, institutional activity, economic growth, crowd sentiment, inflation, and the jobs market, when we string all that together, that list of indicators is generally suggesting bullishness for the Russell. So then we take that and we say, okay, well, let me go look at the Russell. And whether you trade the daily or the 4-hour or the 1-hour or the 15-minute, you can use that bias, that scan from Edgefinder to better understand the chart that you're looking at. So if I agree with that, I look at this and I say, okay, yeah, it's got a bullish reading. I like that. I'm reviewing all the data here. We got a +8, technicals, COT, and fundamentals look good. Nice. Where do I personally take that trade? I like the daily chart and the 4-hour chart. That's where I personally trade. But if you're a 1-hour chart trader and you say, well, I really like this technical zone of support here, maybe you find a trade that fits your system and you have Edgefinder confirmation as well. Maybe that's a trade that you take, right? It's up to you how you use that signal from Edgefinder. It is not a time frame specific signal. Who's the nationality of your biggest customer of Edgefinder? We have a lot of US, UK. We have a lot of Canadians. But it is really international. We have Africans using Edgefinder. We have Asians using Edgefinder. A lot of people in like Singapore and Malaysia. We have a lot of people, less people, I think, in like China and Japan, simply because I think the language barrier to a lot of people who use Edgefinder in content, myself and the other people that come on this show, I think there is obviously a little bit of a language barrier there. We'd love to, by the way, meet some, maybe I can find some Japanese or Chinese content creators that may benefit from Edgefinder and get them sharing it in their content to maybe open us up to that. For example, we had somebody who's French share it with their audience. And we've had a influx of French speaking people get access to the Edgefinder. So as a company, we're still learning how to better, market the tool to other places. We do have a lot from the Middle East. Yes. A lot of people from UAE. We have all over, really. Eventually there will be Edgefinder users on Mars. Whoa, that would be cool. Mexican people? Absolutely. Yes. I mean, it is very global. We have a lot of people using Edgefinder from different parts of the world. More countries using it than not using it. Okay, so response to this morning's data, yields are moving a little bit lower, not too aggressively lower. Dollar index kind of just sitting at resistance here. The VIX is up. That makes sense because you have indices kind of moving lower. The yen down here a little bit. Gold is still testing. You've got resistance here on the 4-hour time frame as well. That's currently being tested. So for the gold bulls out there, again, we want to see this level break out. I'm curious to see what the COT report data tells us today. But that looks like it wants to try and break out, but we'll see. We'll see. Is the Edgefinder equivalent to the Bloomberg terminal? No. Bloomberg terminal is, Brian, that's a great question. The Bloomberg terminal is on another level in terms of a pure real-time software. We could not even come close to competing on some of the aspects that Bloomberg terminal has. Real-time data. I mean, you can track like planes and oil rigs on that thing. Like, you can do so many things. However, I would argue that a lot of what is in the Bloomberg terminal, the average trader does not need all that. The average trader needs to scan simple stuff, bring it all together, and keep it elementary to an extent. There's only so far in fundamental analysis I think I have to go. I don't need to sit there and stare at every single yellow folder event, every single little release, and try and carve out data from everything, right? You can do that. But I think that this gets a big chunk of the work done at not even a fraction of the price. Bloomberg Terminal is $2,200, ready, per month. The average trader does not have that money sitting around. That's why it's a tool that's pretty much exclusive to hedge funds. The Edge Finder, contrarily, I don't know if that's a word, the Edge Finder is usually $1,400, not every month, but one time. Right now, due to the sale event that we're doing, it is, for live stream viewers, $770 one time. And if that is too much, you can split this into 2 payments monthly to make it more affordable to you. We are currently doing a 45% off discount on the Edge Finder. If you've watched my content for a while, if you've thought about getting this tool, now's your chance to do so at a really low cost. You can also split it up if you need help with that. Here is the link, chat with support. You can click here and speak to a real person, not a robot, a real person on my staff who can get you set up, or you can scan the QR code if that's easier for you to speak directly to a member of our team who can set you up with a copy at that discount and can also set you up with a payment plan if that's something that you need. You spent about $1 million on Edge Finder? Yes. And actually, that number will continuously go up. The Edge Finder, we have staff. We have a team of people behind the scenes that are making this stuff possible, building tutorials on how to use stuff, updating all the tools, making sure that stuff is working correctly. It's an operation. So yes, we've spent easily 7 figures on everything that we've done to build Edge Finder. Edge Finder is one of the best investments you can make. It may cost $770 to get it, but it will unlock potential for you to make thousands. If you're thinking of getting it, get it. Thanks so much, Vampire Doggo. Appreciate you on that. Help us out, man. Again, it's an investment that we've built. Now, we've made money on it, so I'm not going to act like this is charity by any means. But the tool for you is $770. The tool for me is a little bit more than $770. And I don't regret it at all. The tool has been a really top seller for us. A lot of people have bought Edge Finder. It's been an awesome journey to be on. And I'm quite passionate about the topic. I love building these sorts of tools. My background's in software engineering, and I have a lot of fun building this stuff and working with, all of our different, customers all over the world. Gold's breaking out. It's certainly trying. Take a look. Gold's up almost 1% on the day now. Back to our 4-hour time frame, you can see we are testing resistance. I would say if you get a nice break through that 5,100 level, then you've really got something going there. Let's check in on the oil trade. So oil, I got to trail my stop loss. I meant to do that yesterday. So I'm going to trail stops probably just right below this candle right here. So if I just take a little bit of a mini support level, we can also draw this in right now as support. So we've got some timid breakouts happening. Let's see if we can actually get some kind of push or follow through today. Obviously, there is a lot weighing on this in regards to what's happening in the Middle East. So we will see what develops there. But even, either ways, I still like the oil longs for the reasons that I mentioned earlier. What you'll notice is that oil is getting a bullish reading, and there's nothing about geopolitics on this screen, right? Technicals look solid. I guess that you could attribute that to geopolitics, but generally, seasonally, the month of February is a decent time for oil longs. Economic growth looks good. Inflation bias looks good. Jobs market bias looks good. So, with or without the geopolitics side, I actually have liked oil longs, and I think now the timing looks decent. So my plan is to take this existing stop loss and move that on up just to lock something in on the trade so I don't, give it back. The U.S. now has assembled its largest military force in the Middle East since 2003. There's been just all the images of aircraft carriers and stuff moving over there. So I think that that's part of the reason oil continues to move higher is you have this uncertainty in the region. And so people aren't waiting around for it. They're just, kind of hedging their bets with long oil situation. Here's silver here. Silver has really kind of gone to sleep on us here recently. We had the huge moves going on and kind of fell apart. And really you can see gold has recovered somewhat decently. Like if we draw a fib from high to low here, you've got gold at like the 50% retracement. Silver's not even at the 38.2. So silver is not recovering as nicely as gold, it seems, which I think is telling. I think that tells you that, gold might actually be picking up some relative strength. If we compare gold to silver through the gold silver ratio, you can actually kind of see what we're talking about here. Take a look. Gold has started to outperform once more, at least recently. Do you ever not take a trade as it's a Friday? The day of the week doesn't really have much of an impact on whether I take trades or not. I saw a hilarious meme this morning. You guys might not think it's hilarious, but I thought it was funny. It was like, and this is all in good fun, but it was talking about SMC or ICG traders, how they will, like every day of the week, they don't take a trade. Like they'll say like Mondays, we don't take trades. Like we wait for things to settle. Tuesdays are choppy. We don't take trades. Wednesdays, we avoid the midweek hustle. Thursdays, we watch and wait, but don't trade. And then Fridays, weird activity on Friday. We don't trade. Sundays, we analyze. I thought that was funny. I know it's kind of at the expense of ICT traders. No hate, all love, but I thought that was a funny joke. Because I feel like I've read that all over the place. Like, oh, I don't trade on Monday, Tuesday, Wednesday, Thursday, or Friday. You can't lose if you don't trade. That is true. That is true. Apparently Wednesday is the best day for them. Interesting. That would be Fed days. Maybe they secretly like fundamentals. Because Fed day is a big Wednesday event. It's funny because it's kind of true. Yeah, I mean, I just don't give a lot of credence to that. When I hear people saying like, oh, I don't trade this day or that, I'm like, okay, cool. Like maybe your backtesting is shown. But generally speaking, the day of the week matters much less to me than like what macro and price action is telling me. But there's never, I trade all year long, every day of the week. I can potentially take a trade. I don't take a trade every day, but I'll trade around Christmas time if the right setup is there, right? Why don't you flex your lifestyle on social media? I have a very comfortable lifestyle. I'm very blessed, and I'm very thankful for my situation. But what does that have to do with my trading? Nothing. I'm not trying to motivate traders. I'm trying to share my genuine experience in the markets, and I really only care about trading on social media. I don't care about showing how wealthy or not I am. It's also, I love my family. I don't want to put them at risk by being flashy. Look, I'll be very real with you. I also grew up in a family that had money. And one of the things you learn is that flaunting money on social media attracts a terrible crowd of people. It attracts a crowd of people that are, sure, you get some people who are genuinely excited and motivated for you, but a lot of people are jealous and angry, and I just don't want to attract that into my life. No need to brag about what you have, just live. Exactly. I am kind of old money. Again, I'm very blessed. My family, my dad was an entrepreneur. I learned a lot of things from my dad. He's still alive. I talked to him this morning. My dad, here's a quick story about my dad. My dad owned a really nice car for a little bit. But then he said, because when I got to the age of being able to drive, his insurance spiked so much, and he's like, I don't really drive it anyways. It feels weird to flaunt it around. He sold it. So he owned a really nice car for a little time. He tried it out. Maybe someday I'll try a nice car, but I don't have a nice car, and I have a nice house. I'll tell you, I have a nice home. You know, that's been to me like the ultimate thing. Is I don't have kids yet, but my wife and I, we've bought a home, and we're paying it down. And, you know, to me, it's like, there's just no need to show that off to random people on the internet. No offense. Try a race. See, like if I wanted to drive a race car, and I'm just not a car person, by the way, it's nothing against, like, if you really like cars, cool. I just don't care. I don't think they're cool. Personally, like, that's just not what attracts me, is being able to invest more money into the markets and have a nice home, and be able to help out family members if I had to. And I know it sounds like, oh, how humble of you, but genuinely, like, you start to learn like what matters in real life, especially if you've had like tough things happen in your world. You're like, that stuff doesn't matter. Nice car, who cares? What matters is the people you love. That's all that matters. Anyways, gold still trying for this. Oil looks okay. Dollar index firm. I'm watching for this. I mean, I think watch how the dollar closes this week. If we can get this kind of move today or Monday, I think the dollar index may be wanting to make that push back up to 99 and 99.5 and maybe even 100. Chris Pulver was saying that yesterday. What's your opinion on TJR? I don't know enough. I really don't. When somebody is a very real trader, I know instantly. When somebody is a really fake trader, I know instantly. It's really easy. Do they show track records on a long-term brokerage statement? If not, ta-da, that's it. What car do you drive? I have a Jeep. I have a Jeep Wrangler. It's a 2019. It's a nice car. It's not anything crazy, but I enjoy it. I think I might go back. I have an old pickup truck that I drive. I think my next vehicle will probably be a truck again. I like trucks. I have, a little bit of land that I live on, so having a pickup truck around is awesome. The Nikkei's been a little soft here recently. Let's see. U.S. stock market opens up in 30 minutes. I think we also are about to throw the show over to our next show host, by the way. We've got Tiger Berry in the building. By the way, just a little bit of an update. If you guys ever want to know what the show lineup is for the day, head over to our website. Head over to a1trading.com. There is a A1 live stream right here. By the way, take advantage of those discounts on EdgeFinder right now. They are all over the website. You can set up a trial, explore if you want to check out the software, go through our tutorials page. That's completely free to demo, go around and putz around on the EdgeFinder if you want to try things out. Same with Stockbox also. If you don't have that, you can check that out there. And then if you want to head over to the live stream schedule, you can always see who is up next on the show. And James behind the scenes does a good job putting that together for us on the producer side. So up next, we have got Tiger Berry taking over the stream for a little bit. Remember, if you guys are interested in taking advantage of that 45% off discount on EdgeFinder, you can also send a direct message on our website to chat directly with our support team. Here is the link for that. And then real quick, I'm going to get this transition going. And up next, you've got Tiger Berry. Stay tuned. Here he comes just after this quick break. This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like $5 all the way to $200. 100K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
What's going on, everybody? Happy Friday. It's going to be a great day by default just because it's Friday. Okay. Hope everybody's doing well. Hope you're staying safe this week. It's been quite the slow last 2 days for me. I had some pretty good action the first couple days of the week. But for me personally, my alerts just haven't really been hitting. So hopefully today we can kind of change that. With today being Friday, guys, I personally, okay, you hear me blabber about daily and 4-hour demand zone, supply zone confluence. But on days like today, when we're getting ready to go into the weekend, I try as hard as I can to get flat. So I usually will stick to the 15-minute to 1-hour time frames, just to try to, take advantage of some intraday action. That way I've got enough time for the trade to work out, do its thing over the course of the day, and then make sure I'm closed by the end of the intraday session. So that's going to be my goal for the day. At the moment, I've really got a couple things I'm watching right now, which at the moment is Euro Swiss and the Pound Aussie for some possible shorts. But just to piggyback on Ola Prime, guys, I wanted to let you know, if you go and create an account here, there's actually a challenge going on this next week. So like this is my dashboard here, but you can go into competition right here, and you can actually hop into a weekly challenge they've got. This is something that they do periodically, and it doesn't matter if you have an account with them or not, by the way. You can just simply create an account. That way you have a dashboard, and then you can go in here and jump into some of these challenges. And as far as prizes go, they do some cash rewards. This is the top 3 right here. $2,000 reward for the first place, and also a free challenge account. So just wanted to throw that out there. You can, you should be able to sign up, okay, but over the course of the weekend, but that starts on Monday. So I just wanted to point that out. And as always, there is a discount for you guys through Nick. I believe it's A1T35 if you were to go to their website and look for an account. So there you go. Yeah, as far as today goes, like I said, I'm mainly keeping an eye on a couple at the moment. Euro Swiss being one. Now it's currently off the list. Okay, Euro Swiss, I do believe, has fallen down to -4. So with the strength that we've seen in the Eurozone today, with all the PMI data, may not get this signal. Okay, I do believe it's not going to come down to where I want it to be. Yeah, Euro Swiss -4. So that may be a wash for the day, but man, on a technical basis, I think it looks really good, but I got to sit on my hands, guys. And then also, like I said, the Pound Aussie, which I do believe is still giving us a signal, a bearish signal. So let me go over here. Yeah, -7. So let's just hop right into the Euro Swiss. Again, we've had a lot of good PMI data, so probably not going to get this today. Might have to wait and see what happens next week. Euro Swiss, I've already had the alert hit. And I was kind of keeping an eye on a couple of supply zones here, guys. As always, start with the daily. Make sure I'm getting lower lows and highs. Make sure my 8 EMA is below my 21 EMA. Okay, check. And then normally I'll say right here, this is where I've got to have my Edge Finder score, which I don't have. So, but just looking at it from a technical setup, just so you can get an idea of what I was looking at, I do have a couple supply zones here. Now, this is a 1-hour supply. And then right here is a 15-minute supply. Okay, so that's meeting what I would like to do today, which is max 1 hour. The 50 EMA is below the 200 EMA, so that's a check. That's confirming a pullback that's confirming that trend is good on this time frame. And I just like to pullbacks into zones after we've pierced the 200. So that's a check. Now, one thing I don't have as of yet is our RSI as far as this zone here, which we've already pushed through. So I basically ignored this signal because of that reason. We did not get a strong enough overbought signal. So if we go down to the 15, this is what they refer to as the scalp strategy from where I learned this. But I'm keeping an eye on this. And by the way, my mouse zoom feature for some reason is going slow. So I don't know why that is, but I've got this 15-minute supply right here. Now, as always, I try to look at myself as much as possible as a retired trader. Well, what the hell does that mean? Just means something good has got to happen. All my rules have got to be met before I consider trading, getting into this asset short or long. So if it's all good, it's got to pull me out of retirement. I don't know if that makes sense or not, but that's kind of the way I try to look at it, because if we're trying to get into trades all the time, we'll find reasons. We'll make reasons to get into a trade, right? And skip rules and ignore rules. I've said it before. I'll have a good week, and then sometimes I'll come in the next week and just forget about a rule. Because, you get that I'm on cloud 9 type of feeling, right? Yeah, that happens. That happens no matter how long you've been a trader. Oh, I can skip this. Well, there was no gap in that zone, so I'm fine. I'll make it work. Nah, got to follow your rules. So anyway, that's the supply zone I'm keeping an eye on. Now, the other challenge is obviously, and this is another reason I'm staying out of this, is because my 50 has went above my 200. Okay. So yeah, overall, Euro Swiss is just completely back off of my list. So we'll take a look at that pound Aussie next, since that is giving me a nice bearish -7 score. As always, start from the top. This thing is going down nicely on a daily. Now we're coming up to a demand zone, but it's still quite a ways away. I think I'll be fine. Actually, let me double check that real quick. Yeah, pound Aussie -7. Okay. So if I go down to my 1 hour, and as always, guys, if you have anything you'd like me to bump to the front of the row, looking at some of these smaller time frames, supply and demand zones, feel free. And I'll be happy to jump on it and see what we got. But anyway, as far as this one goes, I've got my favorite confluence in all the world right up here. It's a little higher up. It's this daily. Okay, it's a daily supply, but it's got a 4-hour supply inside of it. So that is the confluence that I love to see. That's, again, where I've personally had the most success. So I try as much as I can to focus on those the most. Okay, that's number one. The other cool thing with the pound Aussie is, if I step back to the daily for a second, turn off my drawings for a second here, is we broke structure to the downside and closed with yesterday's intraday candle. So because that happened, that's what basically gave me permission to wrap a rectangle around this daily candle right here. Okay, I had to see that first. I had to see the break of structure, and then obviously the close. So that right there met my criteria to draw up the yellow zone box. Okay, and then of course I find the 4-hour within. So that's my favorite spot. That's something I'm not looking at for today. Again, I'd prefer to be flat. I'm going to be flat no matter what looks good. That way I can focus on that trade setup next week, assuming the edge finder, continues to give us a bearish score. So that's that. And then if we go down to some smaller time frames, guys, I've got a whole bunch of colors in here, a whole bunch of swing highs, a whole bunch of supply zones. Well, which one do I pick? Well, right now I'm honestly keeping an eye on this lowest one, because we kind of had a spot here where support ended up turning around to become resistance. Okay, a couple support turned into some resistance here. So I like this area, and I like the fact that it kind of created a brand new supply zone. I believe this was the small 10-minute time frame. Okay, so again, there's my 10-minute candle followed by a strong gap out, and then obviously a continuation that broke structure. It broke structure to the downside. So that's meeting my criteria. What else? Is my 50 under my 200? It is, on a 15-minute and on a 10-minute. So we did just have the U.S. data come out. I know Nick touched on it awesomely. But yeah, one of them was good, one of them was bad. So we got a little bit of wishy-washiness even in the pound of the euro. So I'm basically just interested to see if we bounce into this 10-minute supply zone. Okay, if I can get a nice bearish 15-minute coming out of it, might hop on to the short side and go down. Okay, I would want to buy to cover ahead of this demand zone down here, because that's a pretty strong. I mean, think about it. That's a pretty strong basing action, because we had a nice gap come out of that. So, if I get into this short and price goes in my favor, typically you hear get out at the swing high, the swing low. Well, yeah, that would be down here, but I'm a little more worried about that as far as a spot to possibly push price back against me. So that's my green line in the sand. If we get in this trade, okay, I'm gonna make that a 2-to-1. I do believe it's about an 80 pip movement, if I calculated that right earlier. What was that? Yeah, 80 pips. So 80 divided by 2, I'd be putting a 40 pip stop loss on it. Okay, that stop loss would take me right here, about this, yeah, right in the middle of this upper zone. So it would basically kind of give me this supply zone as an extra little buffer, if price were to go against me. So as far as I can tell, there's really 2 opportunities here. Okay, does this supply zone want to hold, or does this one want to hold? This is pretty strong looking over here. Hey, look at all the red candles coming out of that pierced that former support. Okay, so I like that. I really like that. But we are above the 200. Okay, so all I really want to see, just get a push in, which my alert will probably, actually it did go off. Oh, no, never mind. We're still a pip or 2 away. That'll probably go off here in a few minutes. And then what'll happen? I'll just basically wait for the 15-minute bearish candle to form. Okay, and I'll be going short. Simple 2-to-1 trade. What about the average true range? How fast does this thing move in a day? 133 pips. 133 pips. Okay, that's the 133 over here. Just ignore the last number anytime you guys are looking at average true range. And then just look at the numbers before. So that's a heavy mover, guys. That's a big mover. Okay, 133 pips in a day on average. That's nice. That's one of the highest. That's one of the fastest moving currency pairs. That's the Lamborghini, if you will. Okay, things like Euro Pound, that's your Ford Pinto, where they're just chugging along, moving like molasses. This is your Lamborghini. This is your Porsche. Okay, a lot of volatility. So yeah, that's with an 80 pip take profit. That's plenty of time for this trade to work out, right? So it's just something it's just a nice little trick. Okay, if you guys are wanting to get in and out of a trade on a day like today, you don't want to risk holding it over the weekend, especially because, President Trump has given a little bit of a deadline for Iran, right? So we don't know. We could see bombs flying. Who knows? Hopefully not. Hopefully cooler heads prevail, but we have to be real about this stuff. Do we really want to be holding a trade open over the weekend when we get just a gigantic gap on Sunday? Sunday here in the States, but Monday overseas when the Forex market opens, right? I know I don't want to take the chance. So it's days like today, I am out of this trade, no matter what it looks like. It could be 5 pips from my stop loss, I'm closing it. It could be 5 pips from my take profit, I'm closing it. It could just go straight sideways, and I'm closing it. I am not taking the chance of a Sunday gap, when we have headlines like we got with geopolitics. So that's going to be my favorite setup for the day. And I'm looking forward to, I'm looking forward to the COT report today when it comes out. I mean, think about it. The items that like chaos, oil, gold, silver. I'm interested to see what they're going to be, what the big banks have positioned themselves on. Is oil going to have a big net long percentage change, prepping for the potential inevitableness of bombs getting thrown around? I don't know. We'll find out. That's one of the main things I'm interested in. And this report usually comes out around the end of the intraday session here in the States. So that's on my radar. And then really, as far as some of these other assets, let me go over here and look. Blah, 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 blah. Okay. Yeah, I would really like to hop in the Russell, but I tell you, I don't have it on any of my 3 brokers. I've got 2 challenge accounts. And I've got 1 funded account, and none of them have Russell. So I can't even trade it. It's kind of nonsense. The next one I get, though, I'm definitely going to make sure it's got Russell on there. Don't pick tops and bottoms, Ball Out says. And only scale winners. Do not add to losers. These two things will save health and money. That's it. That's it, guys. And an easy way to avoid that is retail sentiment. Take a look at what the crowd's doing. If the average trader's out there long something, and we know that 90% of traders lose 90% of their money typically within 90 days of getting their account, do we want to observe the masses and follow them? Or do we want to observe the masses and do the opposite, guys? That's the strength. That's the strength in the crowd sentiment section here on the top setups, okay, on EdgeFinder. Okay. It's taken into consideration, obviously, retail sentiment. I do believe, Nick, if I'm not mistaken, it also takes into account the AAII sentiment as well as the put to call ratio. I think that's a combination of the three. I could be wrong, but I feel like that's what it is. That's strong signals, guys. Okay. The relationship of the dumb money, okay, not my term. That's just a term that's been around forever. But understanding the relationship between the dumb money and the smart money, which is the COT report, that's a big, big thing. I mentioned it on my live stream this morning. Think of it like a tripod, guys, when you're talking fundamental analysis, sentiment analysis, technical analysis. Each one represents a leg. If you pull out one leg, the whole thing crashes to the floor. Gotta have combination of the three so that you're not missing out, okay? It's a complete picture. Trifecta trio, right? So definitely hop on if you guys haven't got the EdgeFinder. Again, the rest of the week he does have the 40% off, but I do believe it's 45% if you get on it while we are on stream. So definitely, guys, take advantage of that. It's be good. And yeah, he's said it before. EdgeFinder will definitely increase in price at some point with all the new stuff and with all the updates and upgrades he's adding. Okay, so it's only going to get more pricey. Keep that in mind for the future. You might as well get it now when it's at the cheapest point it will probably ever be. Okay. But anyway, let's see what we got here. Got some healthy conversations going on over here. I like it. Yeah. Anyway, so let's get back to some of these setups. Russell, Aussie yen. I had a conversation with somebody yesterday. Okay. It was a live stream I was on, and they were asking if anybody trades Aussie yen. Okay. And I said, well, yeah, I do. I chimed in. This was just all on chat. And they said, okay, let's test this theory out. You've got 3 seconds to let me know who the prime minister is. 3, 2, 1. And I just put in the chat, some chick, LOL, because I didn't know. I didn't know who the hell it was. But then he said, well, you're almost correct, but I think you're referring to New Zealand. So anyway, the point is what he was saying, what he was claiming is if you don't understand who's running the show, then you shouldn't be trading that asset. And I was sitting there thinking, I'm like, well, but if you understand the hard data, that's really all that matters because these are the data. These are the real facts, the hard facts, right? Yeah, you want to pay attention. And of course, I personally like to follow a lot of these premiers, prime ministers, presidents, central bankers on X, just so I can kind of get that 30,000 foot view look of what they're talking about on the daily, their lip flapping sessions, things of that nature. But at the end of the day, guys, it's really just the relationship of the data. Would you guys agree with that? Do we have to know every little underlying thing that a president or a prime minister or premier thinks or says? Yeah, for those immediate, effects from, a hot tweet, a Trump tweet, right? Just as an example. It's good to know those things. And honestly, guys, it's good whether you like him or not. It's a smart thing just to follow him on his own page where he's putting all of his stuff. Now, obviously, a lot of it's silly and nonsense, but every now and then he's going to be posting something that could potentially move markets, right? So just keep that in mind. You don't have to like Nick said earlier in the stream. You don't have to like him. You don't have to hate him. Same thing with Biden or any of these other presidents or future presidents. But yes, you still at least want to know what they're saying, right? In case they say something stupid or silly, it's going to move markets. So, but anyway, let's go look at Russell. Let's go look at Aussie yen since I brought it up. Aussie yen, okay, daily is up. 4 hour. We did have a newly created demand zone here whenever we closed up here the other day. So this is another one I'm liking. If we look at this demand zone, and of course you see my gap, I just kind of colored in there. I'll just get that out of the way. This is my ideal demand zone, guys. My ideal and perfect setup as far as the zone. I've got a leg in, okay, and then I've got 1, 2, 3 basing candles before the leg out. This right here is of utmost importance when I'm looking for unfilled orders. It cannot be any more than 3 candles. If I look at a demand zone, it's got 4, 5, 6 candles. That's way too much time. Okay, way too much time. So this is a nice, nice zone that created. So I'm waiting further. And again, this isn't going to be today, but this is potentially next week. If we somehow get a pullback that far, it's over 100 pips away, so we may not get it. Then that's my higher time frame favorite setup. 50 above 200. Daily is obviously up. Got to get an RSI reading back to the 20 level. Okay. That's next week. But as far as today, we do have a zone a little deeper down. It's a 1 hour, really nice gap coming out. Okay, it gave me some bullish candles coming out. So I am still looking at this one. If I focus more in on the swing low, swing high, obviously that's going to be just below that. But 1 bottom, 2 bottoms, 3 bottoms. Triple bottom in it. So there's going to be some liquidity down here, right? Stop losses, sell orders for those buyers that pushed price up. So liquidity grab, unfilled orders. That's going to be probably my second trade of the day. That's if we even get down there. It's quite a ways away. You guys see I did actually draw up a smaller one, a smaller time frame zone up here. It's a little high up on the curve if I scroll out to the higher time frames though. So I don't know, I stayed out of it because of that reason. It's just a little high up, but as you can see, hey, it caught some bids. Price bounced in, pushed up. Okay. And then of course we start bouncing into some supply zones. So it's just too high. It may work out and go to the swing high for all I know, for all I care. But it's just a little too expensive for my taste. Because as always, try to look at it from the context of our time frames. Daily, 4 hours. As far as who next, I do believe Marco's coming up, ball out. I think they did a little bit of a change around, so I think Marco's coming on a little bit early. All right. But anyway, so that's Aussie yen. As far as the Russell goes, I know I drew some drawings up, even though I don't trade it because I don't have it. I still like to try to follow it, stay on top of it for when I do finally get it. Yeah, I mean, it's, higher time frame, obviously up, go down to a 1 hour. I drew up a zone down here. So what did I draw up? 15 minute, I think it was. Yeah, 15 minute. So that's a pretty decent looking 15 minute demand right here. Look at all the volume spread analysis activity that happened. Okay. Again, I like those yellow and red candles, man. That typically means there's some activity. There's some action going on. And if I could see anything that's hinting or resembling institutional trading, buying or selling taking place, that's the zones I want to be looking to get into, me personally. Okay? As always, not financial advice, just what I would do if I had it. But yeah, I'm looking at that as a potential. I'm going to be tracking. I'm going to be interested to see what happens. Okay, again, we're a little deeper down, so that'd be low on the curve, right? Buying discounts, sell up here in premiums. Right? There's some more supply zone there. There's probably another one there on a smaller time frame. But yeah, that's your Russell right there. The supply and demand zone look. And look back here in the past, I drew up a daily and a 4 hour. And what did it do? It bounced the 4 hour confluence off to the races. In fact, it came down a second time and went off to the races. I'm telling you guys, no matter what you trade, no matter what strategy you have, it's still a good understanding. It's still a good idea to understand where those supply and demand zone confluences are, just so that you can protect yourself and not lose all your unrealized profits. Okay. Let's see here. Yeah. About the only real blemish we had in the Eurozone today was the French manufacturing. Okay. That's the only one that went against the grain. It was a whole point less. It did go from expansionary down to contractionary. Remember, 50 is that baseline. 50 is the baseline. So anything above is expansionary. Anything below is contractionary. So that's the lone blemish. But Euro, yeah, like I said, it's looking pretty dang good, guys. Can't argue with strength. And then just taking a look at the updated surprise index, the US dollar is actually pushed up and tied the Aussie. Those two are the strongest currencies as we speak, if we're just looking at the fundamental leg of that tripod. And then obviously Japanese weakness, followed by the pound. So any chance to be buying these assets, match them up with some of these weak assets, like the Aussie yen, which is the one I just went over. That's going to be my favorite. Okay, strength, weakness, strength versus weakness. I do have a couple minutes left. No doubt France is in trouble. Yep. Yep. There you there. But again, that's just one of the sectors, right? Think about it. I don't know if you guys would agree with me or not when I say this, but obviously you got two sectors there. You got manufacturing, you got services. Well, which one is probably the most important sector? Okay? They're both important. Would you agree? Would you agree that the services sector is probably a little bit more important? Are we not living in a digital age, a technology age? Mandulia, I'm from Tennessee. I grew up in West Tennessee, probably a couple, 3 hours away from Nick. So yeah, I'll never shake the twang. I live in Kansas City, but that's where I got my sprouting. That's where I got my youth. Okay, growing up in Tennessee. That's where my daddy was from, Tennessee. So anyway, but yeah, just to finish up before I hop off here, services sector, again, technology, digital age, AI. This is all services related stuff when you're looking at the PMI data. Manufacturing, infrastructure. Would you agree maybe 100, 120, 150 years ago, the manufacturing was pretty important? Okay, the creation of all the steel mills, factories, building bridges, building roads, building steel buildings. They got away from all the wood buildings, started using steel. It was a big, huge industrial age, right? Manufacturing was a hell of a lot important back then. And it's still important today because we still have to maintain it. The infrastructure creaks, it gets old, it rots, it rusts. So it's still important. But the only reason I bring all that up is just to say, at least the services is looking good for you over there in France, right? So that's a good sign for you. And that's just kind of the way I look at the PMI data personally. But I'm about out of time, ladies and gents. Again, not to be financial advice, but especially if you're newer, be careful about the end of the intraday session today and just ask yourself the question, hey, President Trump gave Iran, I think he said 10 to 15 days to accept the nuclear deal or else. Okay. We've seen in the past where that or else could be sooner. Okay. Talking about when he dropped the bombs, when the military dropped the bombs on their nuclear facilities the first time, right? So do we want to stretch out that 10 to 15 days or just want to start worrying about it right away? So if you're newer, be careful about holding trades over the weekend. We don't know what could happen. We don't know if it's going to gap up, if it's going to gap down. But I don't know. I personally, and I've been in this game for over 12 years, I don't want to stick around and find out. So I'm going to be flat. So anyway, guys, that's the end of my day. Again, I do believe we have Marco coming up. So with that, have a wonderful day. Check me out 6:30 at Trade Like a Tiger on YouTube each morning as well if you would like to see some more supply and demand setups. So with that, have a good day, guys. Talk to you next week.
Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to my segment of the stream. I'm no longer in Adidas tracksuits. I have an actual shirt on today. But to get things started, we're starting with the form. So in the comment section, I have this DNA funded form. Fill it out and you will get access into the wheel. So all of the people that fill out the form, I'll take all of your names, put them into the wheel of names, and then we will pick a winner for the DNA challenge. Today we have just let me check. I think it's a 5K one phase account. Yeah, so it's a 5K one phase account. So fill it out. As far as the markets go, what can we see? I have the Nikkei long, which is in profit, trailed the stop loss at 54883. Game plan is to just wait things out. I'm still bullish. Fundamental situation is still bullish in my opinion. Money is flowing into Japan. You can see some numbers. If you go to your Forex Factory filter and we go to all and we go to only the yen, you look at the core machinery orders, okay? You can see that this number is 19.1%, forecast 5.1, and the previous number was minus 11%. What does that tell you? Well, Japan is kind of, the industry in Japan is growing. So the companies in Japan like the new prime minister. They like the outcome of the recent elections. The outcome was super dovish and super right-wing. So it should attract capital back into Japan. We know that capital has been flying out of Japan for the last few years. Now it may be coming back. So let me set up this as it was. All currencies, red impact, apply. Today, what did we have as far as the Forex Factory calendar? We had some manufacturing numbers. We still need to get the dollar manufacturing and services PMIs. That's going to happen in around 10 minutes. So we're going to check this out live. Back to the watch list. On the watch list, Euro Yen, another position that I have currently in some drawdowns. So unfortunately, not working the greatest. But I still think that, in my opinion, the fundamentals are still present. This is still a good position to have, and I'm sticking to it. If anything changes, I will, of course, reassess the position. But right now, I'm pretty happy to keep on holding it. Let me just quickly look at the dollar yen. Dollar yen catching a bid, definitely. But I still believe the yen will overpower most of the other currencies. Aussie dollar pulling back to that 20 MA. The level that I'm looking at to buy is going to be around 0.695. Okay, 695 right at this high. So that's a good support level. I think we can get some dollar strength, hit that level, and then maybe bounce off. So that's my game plan for the Aussie dollar. Wait for a bit more of a pullback, actually for it to maybe cross the 20 MA, and then for me to get in, because I'm seeing some dollar strength recently. I'm seeing the DXY, it's catching a bid, and I think we could pull back a bit more. We have hit some major resistance on the Aussie dollar. Let me show you. So right here. So this is the resistance level that we hit, pretty significant. So I'm expecting a bit of a correction, a bit of a pullback, and then we will see if we can get an entry. Let me also check the edge finders. So AUD USD. Neutral reading on the edge finder, which is not the greatest. I would like to get a bullish reading. We have lost it. Let me just check the history. So if we go to the history, AUD USD, when was the last time we were bullish? Okay, so we had a score of 5 yesterday, and yesterday's print was 3, and now we're printing a 4. I would love to get another confluence, a bullish reading on the edge finder. That is something that I would love to see. Let me check gold as well. Gold getting a bullish reading, okay. And gold is actually the next on the watch list. So gold catching a bid. To be honest, I was expecting a bit of a range bound, maybe even bearish price action. I did some research, did some back testing. Chinese New Year, this week it started. It's going to last for this week and maybe even the next week. This is a period of more quiet let's say, buying from China, or the buying dies down and the demand for gold dies down as well. China is a huge buyer of gold. China is actually a bigger buyer of gold. There's more demand from China than the Western countries. So if China is asleep, if China is taking a break because of the new year, there's going to be less buying, there's going to be less demand. That is at least what was happening in the last 10 years. So that makes me a bit more patient. So we are getting that bullish reading. It's great. I'm just waiting for this week to pass, possibly even the next week. And of course, I won't be taking any new positions late on a Friday. That's just not a good thing to do, especially if we get some news developments out of the US and Iran conflict. And I'm not saying that the development is going to be bullish gold. Yes, if the US attacks Iran over the weekend, gold will gap up. But if there's a deal and it's in writing and everyone confirms that it's the real thing, well, then gold could gap down. So don't just think that gold can gap up. Gold can also gap down on a Sunday evening, which makes me a bit hesitant, of course, to take a buy setup on a Friday. But as I told you, I'm waiting for the next week to pass as well. My general forecast is that we just hover around the 20 MA, range around a bit on gold. And yeah, that's about it. I do definitely have it on the watch list. Pound Aussie flying away without me, unfortunately. Flying away without me. I'm looking at the 20 MA, looking for a pullback. This is a great currency pair. So the UK is dovish, and the RBA is hawkish, basically expecting lower interest rates in England, higher interest rates in Australia. You can check that on the rate probability website. So if we go to the Bank of England, the curve is down. If you go to the RBA, Reserve Bank of Australia, the curve is clearly to the upside. So that's a clear divergence. That gives you a nice edge to sell. Edgefinder was also bearish. Let me check. Pound Aussie, bearish reading right now. So if we get the level, I'm in. If we pull back to that 20 MA, I'll definitely be in a sell setup. Also, we can check for any support levels. Well, I think we have some room. I think we have some room to go even lower. Yeah, I think it could happen. That's the watch list. Nothing has changed. We haven't had a lot of momentum. We haven't had a lot of movement. The US, the stock market is sleepy, range bound. The DAX catching a bit, but not much. Bitcoin being flat. Yeah, just a bit of a quieter time in the markets. Oil prices. Watch out for oil. If something happens over the weekend with the US and Iran, oil can go to 70. And I mean gap up to 70. So we could get some erratic movement. Of course, if there is any drama in that conflict, Iran and the US are both connected with oil. But any uncertainty surrounding oil makes oil prices go higher. Any uncertainty about the oil supply makes oil prices go higher. But again, it's a double-edged sword. If over the weekend they actually come to an agreement, come to a deal, we can also go down. We can gap down. That's why I don't like taking any new positions late on a Friday, unless I have a great edge, unless my edge is solid, like really, really good. So comment time. By the way, I'll post the form one more time if you have missed it. So if you want to get a free DNA funded challenge, fill out the form. All of the names will get put into a wheel of names and we will pick the winner. Hello, Sluggy. Hello, Yoshimitsu. Hello, Max. Hello, Ballout. I got this text after filling the form. Sorry, only one entry is allowed. So it's one email per entry. If you have entered this week with that same email, you won't be able to enter again. So if you want to enter, I would suggest using a different email or waiting for the form to be reset, which will probably happen for the next week. Dollar has been catching bids lately. Yeah, DXY going higher, which is interesting. Interesting development. I think this bottom was when Trump said that he doesn't mind the dollar basically dropping out of the sky. That was the exact bottom of the DXY. Funny how things work. And also, I think there was an article from The Economist about the dollar being like beaten down and the dollar just losing a lot of value. That would be a contrarian indicator. So anytime you get a headline in a major news publication like the New York Times or Financial Times or The Economist, do the exact opposite. So if The Economist says Bitcoin is raging to all-time highs, you should sell it. If The Economist says dollar is beaten down, it's going to go down even more, you should buy it. It's a great contrarian indicator. The way it works is major publications, they tell you what the narrative is. So they tell you what is the most popular narrative, which in turn means that narrative will flip pretty soon, which means the narrative has found its top or its bottom. If everyone knows about something, then there's no buyers left. If everyone knows that Bitcoin is a great asset to own, everyone has already made the decision, do they want to stay neutral or buy? So there's no buyers left. There's only sellers who are going to take profit, and that's your top. Max says, hey Marco, if the confidence is still here and you didn't over-risk the first bet, would you consider averaging that trade higher? If you're talking about Euro-Yen, personally, I would most likely not take another stab. Yeah, I would stay out. If this trade hits the stop loss, my stop loss is at 183.788. If it hits the stop loss, that's it. Okay. Because then my whole idea is broken. So my idea is wrong. We will then break the 20 MA on the daily. We will go back to the range. The yen will clearly not be gaining value. And, you know, that's about it. That trade idea is scratched. What I know, my win rate is only 50%. So on half of my ideas will be losses. Half of my ideas will be stupid, you can say in hindsight. But that's how trading works. 50% of the time, you look stupid. 50% of the time, you look like a genius. That's why also putting things out there on the internet is tough as well, because everyone calls you out. But hey, you know, we signed up for it. Okay, don't say DXY strength. Ballout won't like it. Yeah, it's like a curse word for Ballout. Hello, sir. May I suggest growing a mustache? Well, that is a good suggestion, but I'm still under 30, so maybe when I'm like 50 or 60. Where's the I'm not Russian, so you missed the boat there. Trump news, really? Let me see. I'm considering oh damn. So Trump is considering a limited strike on Iran, came out 1537. Again, Trump, he's known to do a lot of threats, but when it comes to actions, he's not really the guy. If he was actually gonna do a strike, I think he would have just done it. He wouldn't have been saying, I'm considering to do a strike on this. It's like when Trump was saying, oh, we have been talking with Europe, we have been talking with Switzerland, we are talking with Canada, we're reaching all sorts of great deals. And then when it came to actually signing deals, there was nothing to be signed. So it was all talk, no action. But maybe the markets will react to this. I think the best reaction could be on oil prices. Yeah, I think the markets have sort of noticed the way that Trump operates, because if the markets took Trump seriously, the oil would explode higher. Oil prices would absolutely explode higher. Gold would go up as well. Well, gold is actually going up, but if we zoom in a bit to 5 minutes, okay, so going up. Maybe I'm wrong, but I would say you're going to get a reaction on the oil prices as well. Euro dollar, sure, we can take a look. Allegedly, Russian Navy pulled up and joined the Iranian Navy for military exercises. Possibly. It's because I'm speaking about Forex, where mean reversion can work. Clearly not a good idea on commodities or stocks. That is correct. If the US starts bombing, it may be GG, lads. Well, you need to adjust for it. You need to adjust your positions, adjust your portfolio for a possible risk-off scenario. Impact is going to be this, most likely. So yen would catch a bid because it's a safe haven asset. Gold would go up 1 to 2%. The dollar should go up as well, because if there's any sort of conflict with the US involved, the dollar usually acts as a safe haven. Bitcoin would drop massively. Oil prices would go to 70 most likely. So you would get a reaction. And if you know a rough sketch of what could happen, you can prepare your portfolio for a possible conflict. So if you have any positions open, today is Friday, you still have the time to reduce your risk, to change, basically to reduce your risk, or maybe exit some positions going into the weekend. Maybe a smart thing to do. Things could definitely heat up, and things are known to heat up during the weekend. Time for the giveaway. Let me check the form. Today is the 20th of February. Let's see. Okay. Here are the names. Wheel of names. Then, let's see. So 5K, one phase, DNA fund account, Anthony or Rabin. It's going to be Anthony most likely. Anthony A, congrats on being the winner. After my segment, I will send you an email with the code. So after my segment, you can expect an email from me with the code for a 5K one phase account. If you didn't win and you want to get funded, if you want to increase your trading capital, it is one of the 3 biggest reasons why retail traders fail. Consider checking out DNA Funded and use the code A1Live to get 25% off any challenge. So A1Live, 25% off. This is my personal 25K two-phase account. Current equity is 25.73. So, okay, I'm up like 3%, something like that. I have a buy on the S&P, a sell on Euro GBP, a buy on gold. I've had a great experience so far. This is a great prop firm ran by professionals. There's a big broker behind this firm. So as I usually say, it's not a kid in a basement. 95% of prop firms out there, they're here for 6 months. They take your challenge fee and then they just run away. So make sure you're with someone who is reliable. DNA is great. And if you put the discount code in, you get the best price in the industry with a reliable prop firm. So that's about it. Let's go back to the comments. Euro dollar. You guys really want to see euro dollar? Sure, we can take a look. Euro USD. Hello, Joshua. Welcome. It's taco time. It is taco time. Yes, I forgot about the taco trade. Let's see. Euro dollar. I'm bearish. I know Alan is short on the euro dollar. Bearish reading as well. DXY definitely catching a bid. As I told you, this bottom was the exact time when Trump mentioned that he doesn't mind the DXY going lower. And I think it's the same time when The Economist dropped an article about dollar just crashing. So those are 2 great contrarian indicators that the DXY has found the bottom. I'm not super bullish on the dollar. I just think we can bounce off of this support level. We can go back to the highs of the range. I still think we're going to remain inside of the range unless we get a crazy good catalyst. but just bouncing from the top to the bottom is very, very likely to happen. So short-term strength, sure. Long-term strength, I don't think so. That short-term strength could be what we need on the euro dollar to go a bit lower. So this was kind of a blow off top right here. See, right there. Would I go short? No. At the moment, no. I don't think I have a good enough edge to go short on the euro dollar. My bias is short. So if I wanted to put real money behind it, I would. I just don't have that much confidence. But if I had to tell you buy, sell, or neutral, I would say sell. Let's see. Gold has been doo-doo intraday. It's been tough. Gold has been super range-bound and flat. Just boring. Hopefully China comes online and we can actually do something. I mean, this is tough to trade. If you're on the daily chart, it's tough to trade. If you're intraday, if you're on the 1 hour, sure. You can try to buy the bottom, sell the top. Marco, what is the next big play? I think the current big play is still Japan. I think it's still the Nikkei and the yen. Other than that, I don't have a clear narrative on anything. If I did, I would be in a trade. Gold. If I had to tell you, it would be gold. I want to buy it. It's just that I'm waiting for the Chinese New Year to pass, waiting for the demand to kick back in again. Edgefinder is bullish, which was the thing that I needed. So that's great. By the way, we're running, I think it's a 40% sale this month on the Edgefinder at the moment. So if you use the code Marco, you can get 40% off on the software. The link is in the description of the video. And also this code works for the A1 Discord. So if you want to get all of my positions, all of my trades, all of my knowledge, all of my analysis, I recently did a breakdown of how US tax refunds could impact stock prices in the upcoming few weeks. It's all about the Trump's Big Beautiful Bill, and it's all about refunds of taxes that are coming in February. And most of the refunds usually get put into the stock market. So if you want to learn all of that, you can join the Discord, use this code, get a massive discount. Just for me to explain it a bit more. So essentially, Trump's Big Beautiful Bill removed the tax on tips, removed the tax on this, on that, on a couple of things. But in 2025, the taxes were still being charged on the normal rate. So because they were still charged on the normal rate, the US government now needs to basically refund those taxes. And the refunds are coming in February. So right now, the refunds have started to hit people's bank accounts. How big will the refunds be? Around $100 billion bigger than in 2024, I think, or around $700 more per person in 2024, 2025 taxes compared to 2024. So you can expect maybe $100 billion of liquidity to hit the markets. You know, it's not a guarantee, but when people have some extra money, they usually tend to put it in some risky stuff, such as crypto, such as the Nasdaq, such as Nvidia, Google, Microsoft. Those are the stocks that are beaten down at the moment, and they could seem as a good opportunity. But if the markets don't react, it's a red flag. It's a red flag that the confidence has been lost and that people would rather spend that money elsewhere. It tells you something as well. It tells you we're kind of bearish. Essentially, taco trade for the post would be that this, of course, taco means Trump always chickens out. So if Trump says, I'm considering a limited strike on Iran, it actually means, Iran, you should accept the deal. But if you don't accept the deal, I won't do anything. I'll just retreat. So that's the taco trade. How it works in the markets, Trump makes a comment like this. Price of oil goes up. You then sell oil at the top. And then Trump issues a new statement saying, I didn't mean what I said. We're going to reach a deal. Things are going great. And then oil prices go lower. So that's your taco trade. Or Trump issues a comment such as this one. It's a risk-off comment. So the US stock market sells off. You then buy the bottom. You buy it after the sell-off. And then the next day, Trump comes in and says, I didn't mean what I said. We're having talks with Iran. Everything is going great. We're going to reach a deal. And then the prices go back to initial levels, maybe even higher. You have to know, as more of these taco trades keep appearing, the edge behind them will be smaller and smaller because the markets are learning. So the markets are basically humans, and humans, we do tend to learn, especially we learn great when we lose money. So if more and more people start piling into the taco trade, the edge is going to be smaller and smaller. Just keep that in mind. Swiss yen. Swiss yen is a tough one. Swiss yen is a tough one. I don't have a clear bias on it. CHF, JPY. It's in a definite uptrend. Let's see, CHF, JPY. Neutral reading right there. Not something I'm looking to trade. I've been looking at the fundamentals. I've been doing some reading. Edge Finder as well. You know, it's neutral. I'm neutral. I know it's in a huge uptrend. I just don't see a massive edge in participating in this market. If you want to do something with the Swiss, maybe dollar Swiss, but I would rather do something with the yen, such as buy the yen. That's what I think works the best at the moment. Is the tariff ruling today? Apparently so. Let me check current New York time. It should happen possibly in 1 minute. maybe, okay? It's a big maybe. Apparently 10 a.m. New York time is when it could happen. By the way, we had some news. I think we had the flash manufacturing. Flash manufacturing came out a bit lower than the forecast. Services came out a bit lower than the forecast. Okay, but still not bad. Still not bad. Still looks healthy overall. Okay, it's a bit of it's a good number. It missed the forecast, but it's an okay number. So last thing for today. GBP USD, I like it. GBP USD, I like this one even more than the euro dollar. So euro dollar is bearish, but pound dollar is even more bearish. I told you about the recent dollar strength, which plays nicely into this position. What I like the most is that the Bank of England is cutting rates. So Bank of England, 72% chance of a rate cut on the next meeting. Look at the curve, look at the graph. The economy in the UK is not doing well. Let's check the Edge Finder, GBP USD. Awesome, bearish reading. You know what? This may be a good thing to look at. Next week, I'm not going to take a position this week, but next week, let's look at the pound dollar. Let's see if we can sell on pullbacks. If we pull back to the 20 MA, could be nice. I think there's a good edge. I think the UK is basically has some issues, and that the pound will keep on depreciating. So that is about it. Thank you very much for watching. If we get a tariff ruling today, you can expect a post from me in the A1 Discord. If you want to join the A1 Discord, click the link in the description and use the code Marco to get a pretty nice discount. Good luck in the markets. You can catch me next week. I'm streaming every single day, and I wish you all the best. I hope you have fun over the weekend. Hopefully there's not a lot of drama with US and Iran. No one likes to see conflict. No one likes a war. So let's see what happens. Good luck. Goodbye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.